Well, talking about pizza, let's pop it in here. D-O-M, Domino's, 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 Domino's. Look at that run on Domino's. We wanted Domino's to come back into this level. It broke it, retested it. So we talked about it here. We wanted this to come back down, and then look at the earnings. The earnings must have been very, very good. And look what happened. Did anyone jump in on that off that horizontal level? Did anyone get in on that small little pullback there? Did anyone get in it before this jump? As far as I know, it is full screen. Can everyone see my screen properly, or is it just Priya? I can see it fine, I can see it. Okay, so Priya, it's just you need to change one of the settings. Yeah, it is full screen here. Okay, so we had this unmerciful jump. I posted something in the group. I think it was in the stock group here the other day. Yes, so we have Tesla earnings yesterday. We have today, we have Apple, Alphabet, Microsoft, AMD. Tomorrow we have PayPal, Qualcomm, Facebook. Then Thursday we have Amazon. So pretty big earnings news coming up here. So just be aware of that. So basically a week of volatility, and then add into this on Wednesday, Powell will be talking about the Federal Reserve. They'll be talking about quantitative easing, so one of the things that's up for discussion is the QE. Now, a lot of analysts are wanting the QE to start now, whereas they have the QE to taper back, so that to stop pumping the same amount of money, and they want to bring that back to a different level. And they're trying to, some people are saying, well, look, the market is going so well, we should start tapering back now, rather than have 100 million going into it, maybe put 80, pay, and then down to 70, then 60, then 50. But only time will tell. I don't think they will start tapering early. But again, that when Powell comes out and speaks, the bond market will move, which means then we could have a little bit of a correction on the stock market at that particular point. So yes, this week is a huge week for tech, and then on Wednesday is a huge day for the stock market itself. But another market that's been doing extremely well at the minute is crypto, and let's have a look at crypto itself. I'm assuming you all know why this has now started to move. I'm assuming nobody has been living under a rock for the last week. I'm assuming you all know why this has jumped. Okay, so everyone's saying yes, I don't know. Amazon, no. Well, see, this market is all down to fear, and then down to alleviating fear. Now, there was a big old interview all about the B word, where you had Jack Dorsey, you had Cassie Wood, you had Mr. Crypto himself, Elon, all had a big old chat, and from the chat, they're expecting crypto to slowly take off. Elon said that once the likes of Bitcoin become a little more friendly to the planet, he will start using it again. Then shortly afterward, we have Amazon that has come out and said that they're going to start potentially using or taking payments from crypto again as well. So this is all good news. And remember, crypto is just down to supply and demand. Now, once there's been bad news over there's been bad news since April here. Bad news, bad news, bad news. We had the likes of the first pullback. Then we had the cost of mining. Then we had the likes of Elon Musk stop taking Bitcoin as payment. And it's just been bad news after bad news after bad news. And this is the first bit of good news that we've had. Now we have a level here at this 42.5 thousand. Now you could say that this level is a little bit lower. It potentially is. There's a shorter level down here at the 40,000 mark, and we can see it hopping here off this. And there's no coincidence that it has now rejected that level there again. But that seems to be the area there. Now, let's see, will it hit this 42.5 level? If not, will it come back down? So we've had a little bit of good news. Now, me personally, I would probably expect this to come back down to this level here. I don't think this little bit of news is good enough to get all the buyers back into the market. But what it will do is it'll give people a little bit of strength, a little bit of optimism. You'll start seeing people buying it up here now and holding it. What'll happen is they'll come back down. If it comes back and hits this level, you will now see a much higher amount of people jump in at the 30,000 mark because it's held for so long, and then a spike back up to the 40K. So there's a little bit of room for this to jump. So that's my personal opinion. But if it breaks out, then absolutely brilliant. We know that I have 3 positions on this at the moment. One of them up 22 quid. So overall, I'm down 13 quid on my positions at the moment. I've just scaled into it on the way down. And if it continues going lower, I'll scale down here again. If it drops down to the 30K, I might buy another 1% at this particular point. And because this level has been pretty damn strong, so potentially stick another order in at this level if it comes back. But I do expect it to come back before it goes. I might even expect it to take out all these lows, because how many people are trading this on CFD, on leverage? They will have their stop loss below this level. So I might even see it stop loss hunt and then take off. So, but only time will tell. The idea would be, as I'd like to see it now take off, but only time will tell on this particular one. So we've seen this bit of jump on across the market on all of them. So we've seen it on all of them. 88, Cardano came back. I still didn't get friggin' triggered into that level. And pop back up. I can see this hitting this level and then dropping back down again. But again, it's come down from the likes of the good news, the likes of the feel-good factor after all about the B word, that interview that went on with the 3 of them. So that's where all this little bit of momentum is going. And now it'll be a case whether there's enough people jumping on the bandwagon now. Is this the catalyst for this bull run to start off? But it's definitely enough to stimulate the market and potentially scalp between these 2 levels. Now, I know some people will want to scalp with eToro between these 2 levels because the actual spread is quite big. But if you're on eToro X, if the spread is much, much lower, or if you're on any of the other platforms, you can scalp between these 2 levels and then buy it here, par close 50% of the position, comes back down, buy again, par close 50%. And then if it takes off, at least you have 50% of your position running. So Dash also had a pretty big jump, but Dash had a pretty big jump before all about the B word, and then it come back inside this level. So it wasn't one of the crypto that was mentioned on the day. And Bitcoin, Ethereum, Dodge, they were all sort of mentioned on the day. So this one wasn't, and there's no coincidence that it come back in. So we had a big pump and dump on the likes of this, which was 100% move, well, almost 100% move. So it went from $100 up to about 178, and so almost had a 100% move. But again, these look undervalued if the market is going to take off. So remember, these altcoins, if the likes of the majors take off, the likes of the Bitcoins, the likes of the Cardanas, the likes of the bigger ones, Ethereum, take off, the likes of these ones will eventually take off as well. So I would slowly start buying up little bits of these other altcoins. There's potential, there's loads of potential on these if they take off. And remember, if the likes of Bitcoin takes off, generally smaller altcoins take a couple of days or a week to take off. So we may not miss the boat even if the likes of the major ones take off. Ethereum. Again, come back down and hit this floor and then sort of took off. Did anyone buy it back at this floor, what, 5 or 6 days ago? And if you did you buy it on leverage or did you buy the underlying asset? Because look at that for a little entry bar. It was absolutely perfect for a CFD trade there. It's one of those trades that you either take and you either take it and it takes off. So someone said there's no leverage in the UK. Of course there is. Of course there is. You just have to use other brokers. If you want leverage, you'll find it. It's quite easy to get. So if you entry there, stop loss here, and what's that, about a 2 to 1? If you had taken it, there to there is 12%, up to the high was 31. So I'm pretty sure leverage in the UK is legal or is not legal. No, it's not legal. But all you do is you get a broker that has an entity in Cayman Islands, in the likes of British Virgin Islands, in the likes of Cyprus, and the likes of all those, and then you can trade with leverage in the UK. So it all depends on where the broker has licenses. So it's not that. So for instance, eToro, when I was there, they were looking to do a license in the Cayman Islands, so which means then that you guys wouldn't have to pay tax. Now, as it turned out, they didn't do it because the Cayman Islands was the next one on the list that was being cracked down, so which means they didn't actually do it. So it just means that anyone who has a license in the likes of, say, Dubai or the likes of any of those other places, it means then that everything is then running through the Dubai entity, which means then you have leverage as much as you want. Okay. So the eToro is an Israeli company. So they have regulation in ASEC, so in Australia, CISEC, Cyprus, and FCA in the UK. And they're looking for licenses, regulation in the US. But that is they're still working on that. And then we'll have a look at Dodge. Let's see how that was affected. And we had a small little spike on that. Not major, nowhere near as much as the other two. But we have that horizontal level there. Not as much as the other two, but it did have a little jump to the upside. So something I wanted to bring your attention to as well is, does anyone have any other crypto they want me to have a look at before we go on? I know you guys like Matic. So Matic, come back down to this level again. Look, bounced off this horizontal level. People tell me all the time crypto doesn't follow technical analysis. Well, the ones that are being traded quite heavily do at the end of the day. Okay, so no one has come up with any suggestions. Perfect. So what I want to do is talk about copper. And no, it's not because I'm ginger. It's because copper had a bit of a spike yesterday. I knew I'd get an LOL out of that. Go on, Gary, get involved. So we had, yeah, finally, absolutely. So copper had a spike. So we're in copper. Well, we're in copper from here, which is, so we entered in copper on the 21st of June on my birthday. We ended in copper, and it's now the 27th. So that's a month and 7 days, which is quite annoying that it's taken that long. But again, we are up at the moment. We're up 2-1 at the moment. Okay. Now, just to let you know, copper expires on the 29th. So we will be expiring on the 29th. Now, on the 29th, I won't be jumping back into copper. I won't be jumping back into copper. It has, the boat has gone, it has moved. It won't be something that I am jumping back in unless it's, bear with me, is it not August? Let's have a quick look. Trade, learn more, expiry, copper, the 29th to the 6th. Oh, it is actually, sorry, it is. It's actually another month. So they have actually 2-month contracts. Okay, cool. So it looks like the next contract expires on the 26th. Sorry, my bad. My bad. So it means that it's not going to expire. So we will leave that there. Perfect. Well, if this hits the 3-1, if this hits the 3-1 level, which is about 4 or 5, I will part close the position. I will part close the position, and I will be closing half it. So I'll be going press X. I'll be part closing the position, and I'll be closing 150 quid. Right, once that gets to 300. So at the present moment, if we look at this trade, I have 300 here on it. So what I'm going to do is see the take profit. I'm going to change that to just put another 1 in front of it, 1,000, because I don't want to be triggered out of this trade by mistake if I have another month on it. So I don't want to be triggered out of this trade as a mistake. So I've put another 1 on that just to give it loads and loads of room. But if this hits 300, I will part close the position. I will move my stop loss inside break even. Now, one of the things that I will do is see the fees is 0. I will probably put it 15 or 20 quid in the profit. Okay, which means then that it will run. Okay. Also, then we have the MS trade that we took. So not Marks and Spencer's, Morgan Stanley. I keep calling them Marks and Spencer for some stupid reason. We've had a nice little bull run on this. So we talked about this pulling back here on the webinar. We talked about taking this trade here on this 4 hours. So it's off this level. See this level? Come back. It's then that's a double bottom. Okay, or a double top at that, which is now come back, support and resistance, bounce, bounce, bounce. We drop down to the 4-hour trade. Did anyone take that? Did anyone have the cojones to take that trade? If you did, well done. Yes, Billy, get in there, my son. Get in there. Well done. Good trade. I didn't have the bottle myself. So there was a trade there, 1.2. At the present moment, it's 1.6. Did you take it as a CFD or did you take it as the underlying asset? Good lads. Good lads. I took it at 88. Okay. So you took it at our original entry. Okay, well done again. So that's our original entry. There was our second entry. And that would be the third one at. So you got in at $88. Well, $88 is down here. Or you're up $88. So there's $88. Okay, so you got in here. Okay, cool. So anyone who jumped in on this, then well done. And this is called scaling into a position. Okay. This is called scaling into a position. This is us looking at a market that's trending. And the beauty of this is you don't need to go and trade massive other amounts of market. So this trade here is free. I have no downside on this market, on this trade. This one here is 2% over the minute. I could close it now. And that means then that par close the position, move my stop loss inside break even, which means I have no downside again. But I still think there's more upside in this. I still think there's loads more upside in this. Now, whether it'll drop, come down and hit this line and then take off, or take off and then come back down. We're going to have a phase two. So it's made a higher high. If we look at these highs, they generally go a little bit higher. So I'm expecting a little bit higher for this to go and then pull back. So I'm hoping it hits the 3-to-1 again. And if it hits the 3-to-1, I will be par closing that trade and then coming down. Another one we talked about was BlackRock. I haven't looked at it. Black. I can't spell now. Can someone send me in the spelling of BlackRock? Okay, so we talked about this potential trade here. So we had this pullback onto this horizontal entry stop loss. So there was a trade there. Anyone who jumped into this is slightly up. Did anyone take this trade that we talked about? Did anyone take that? Okay, so by the lack of responses, then no one took it. Okay, cool. Well, there's still, the trade is there. We're in a little bit of profit. Let's see how this plays out. On the webinar also, we talked about Aussie USD. That was on Sunday. We're looking at a sell on this. So we talked about this potential trade here. Coming down off that, and we were looking at this particular trade here. So did anyone take this? I know Alex, you took this. So we got triggered in. So we took this, so the stop loss here got triggered in, come back up, came down to the profit and then come up. So we have this little bit of sidewaysness. So the sellers are trying to push it down here, and then the buyers are jumping in. So there's a little bit of uncertainty here. Now, there's a little bit of uncertainty here at the minute. Is there any reason for that little bit of uncertainty at the moment? Can anyone tell me why there's a little bit of uncertainty at the moment on that? Bear in mind, I've already given you the answer. Lockdown in Australia, no. But if a lockdown in Australia, then that would mean Aussie would get weaker. The Fed on Wednesday. Well done, Andy. Someone is getting. Well done, Billy. Wednesday's Fed. I think everyone is sort of waiting on that. I think that it's Wednesday's announcement. The market will probably take off before the announcement, in anticipation that what traders try to do is they try to preempt the market and expect the market to go in a particular direction. And then all of a sudden it rickshaws in the other way because the market has priced in what they expected to say, and what was said wasn't as good as expected, or wasn't as bad as expected, or so on and so forth. So that's what's going on here. So we are stuck in a trade with the Fed coming out. Also, Euro JPY. I know Jason popped this up in the group, which is another trade that I also took myself. segment. We have that there as well. So we have that green buying bar there. Entry, stop loss, entry there. So stop loss, entry, and looking to short the market there as well. JPY, anyone who is, did anyone take that? Okay, and if we look at the strength matrix here, for anyone who's on this, this is my watch list for the week. And what I do is plus or minus depending on how strong or weak or what's going on here. And so we have US dollars +3, euros -1, GBP is 0. CAD or Aussie is 6, CAD or -6, CAD is -5, CHF is 4, NZD is 1, and that means then JPY is 6. So yes, I understand that we're trading the strongest currency pair versus one of the stronger currency pairs, but that one was the best setup. So the idea would be is JPY versus AUD. So that would be the ideal scenario, or JPY versus CAD. We'll just have a quick look at them. So AUD, JPY. And then there's no coincidence again that this has gone down. Did anyone take this one? Whoop. We could have taken that off that. Now again, it's not the best trend line, but we have a horizontal here. We have a support and resistance level right there. It's a bounce. So and that's how the strength matrix works. We're trading strength versus weakness. Okay, yes, the sellers pushed in here. It popped back up, the sellers pushed in again today. So the idea is we're looking for a little bit of JPY strength to the downside. So Aussie weakness. And just let's see CAD, JPY. Let's see what that one looks like before we finish up. This one hasn't moved as promising, but again, we still have that trade there. Now, the difference with this one is it didn't give us a good a setup as the other ones. The trend line is not there. We don't sort of have a trend line. Let's see this horizontal. Horizontal there, I'd have to make it fit. So the horizontal is not as clear on this one. So this one I wouldn't have taken. This wouldn't have met my rules. I would want it to go up a little bit higher and then drop. If that makes sense. Okay, everyone, it's been an absolute pleasure. I'm off to Lake District now. So I have 6 hours of driving. My boot camp is on at 8 o'clock. So the final boot camp. I'm hoping to get there and do the boot camp. Hoping traffic doesn't kick off. I'm going to pass you over to my lovely assistant. And Ben, I'm assuming you're there.
Yeah, mate. I am alive and well. I'm all here.
I will, lovies and leavies. Ben will wrap up with you, and hope you all have a lovely evening, guys.
Safe journey, mate. Safe journey. How are we doing, guys? You should be able to obviously hear me nice and clearly, but also see my screen here. So it should have the Reuters page there. You should be able to see that. Just confirm for me that is all good, please, before I start chatting away and you can't actually see anything. Can you see the screen? Okay, yeah, wicked. Good. Hope you are all doing well since the last time we spoke. Wanted to chat to you today, obviously, what's going on in stock markets and mainly what's going on, obviously, with the whole Chinese situation and the Chinese companies. There seems to be, well, I suppose it's the classic scenario, right? Something big's going on that's obviously impacting the market, and there's that typical rollover of panic selling and stuff like this. Okay, so I've seen a lot of people sort of posting and talking about, oh yeah, the Chinese market's dropping massively, the regulations they're bringing in, blah blah blah. We should be selling all of our Chinese stocks, maybe shorting the market, all this kind of stuff. The typical kind of scenario of people panicking and going the other way. Okay, now essentially what's happened in a bit of a nutshell, basically the Chinese government are bringing in sort of regulations that are mainly impacting educational companies and tech companies, obviously Chinese based companies. Now it's basically creating a bit of a ripple effect, if you will, and the rest of the market has been dropping. So we've seen like the China 50 and stuff like that, obviously taking quite a big hit, and of course, obviously then seeing individual Chinese companies take a big drop as well. It's been something obviously that's rippled right through the market. Now, as I say, the typical thing of what a lot of people and a lot of investors are doing is they're going out, they're going, oh, look, I need to get rid of all my Chinese-based companies. I need to sell it all. Let me try and short the market, all this kind of thing. What you're now doing is you're chasing as an emotional response. Things like this go on. These types of events go on, every now and again. And what it actually does is it creates very unique opportunities. It's a bit like, look, let's take another look, look at a most recent sort of event that's made a huge market move that people have panicked in and then lost out on. And obviously go back to March of last year with COVID, right? People panicking, the market dropped like 35, 36%, whatever it was. People and then obviously panicking, going, oh, look, I need to sell all my stocks, need to get out of things, blah, blah, blah. Maybe you need to try and short the market. What's happened since then? The stock market's doubled. It's the typical situation, right? Now, obviously, I don't know, what the government will do next. I don't know exactly how the regulations will impact. But what I do know is if that you focus on owning good quality businesses within there, at the end of the day, it's that typical situation of these companies will recover eventually. So what it can do is if you invest your money wisely, and of course, risk manage, everything like that, this could present a very unique situation. Now, what I'm actually going to be doing on the open in an hour's time is actually taking a little bit of a position in Alibaba. And the reason that I want to take a position in Alibaba, I want to kind of walk through with you now. And as I say, it's all about identifying the right opportunities. When you have a market takes a big dip, that creates the biggest opportunity for you as an investor going forward. Am I saying that the Chinese market's going to react and recover massively tomorrow or next week? No, this could go on for months. I don't know, how quickly they're going to bring regulations in. We don't know how the regulations are going to impact and so on and so forth. But if you are able to buy a good quality company at a lower price, ultimately it is going to be a solid and sort of lower risk investment. There's no guarantee of anything, but it will become a lower risk investment, right? So what I'm looking at here, and the reason I'm looking at Alibaba basically is, if I sort of run through this for you, I actually made a video, it's actually on my YouTube channel, so back here, so was this a week ago, talking about Alibaba and saying that I would like to buy Alibaba, I just want to buy it a bit lower. Now, if we go back to about November time last year and look at the peak was about 319. We're currently trading at 184 as of the close yesterday, which is a 42% dip from the high. Now, when Alibaba was up here and Alibaba being a fantastic company, if I'd have said to you Alibaba is going to drop 42%, you would have said, I'm absolutely mental. I don't know what I'm talking about. And this is one of those prime examples when we say, no matter how great a company is, they do have big drops. I'd done my stock report that I sent out yesterday, for example, was on the company Visa, right? Is in like the credit card company. Now, I said that I would like to buy Visa under $100. It's currently trading at $250. Now, that sounds mental for it to cut more than in half, but it happens, right? The stocks have these huge drops. Look at the COVID situation, this dropped 37% then. Obviously, fundamentals can increase along the way. Companies do it all the time. It's a bit like when I say, yes, I'd love to own Apple, but I'm not owning it up here at 149. I'd like to own it about 40% lower. People say, you're fucking mad. The stock's never going to drop 40%, best company in the world. Okay, yeah, cool. I'm not denying that. But what it is it's overvalued. And when companies get overvalued, the market naturally at some point corrects itself. The same point we talk about the market as a whole is massively overvalued at the moment. Market corrections happen. Stock corrections happen. There can be various things that can trigger them. It can be the natural rebalancing of the market, or there could be particular events that then kind of give a market a nudge in a direction. But these things happen. And when we now look at Alibaba, down 42% from its high, all of a sudden, that thing that would never happen is now a reality. And what it has done is it's put it in my scope, basically, because in this video here, I talk about, if I can try and find, so it's about here. Look, I talk about how the intrinsic value per share is around $256 per share in Alibaba, based on my my calculations and my cash flow analysis. So I use 250 as my marker. So this is something I always do. If I ever look at a stock and, you know, either it's getting close to being undervalued or it's, you know, near and around that kind of region or whatever, I typically will put a line on there. So I then know on the chart, that's kind of my line in the sand. And then if a stock starts to get underneath, I'll rerun my calculations and so on and so forth. Now, obviously, my calculations were only done a week ago, so I don't need to redo them. I've used 250 as a, you know, it's a bit of a psychological round number, basically. But if we look at this now, we're currently trading around here. That gives us around a 35% margin between where we are trading to where the intrinsic value is. Now, for me, my rule of thumb is anything more than 30%. So I want a 30% gap. Now, I'm not saying that me buying it here at 185 is going to put me in the position by where the stock is now going to recover straight away. When I actually posted this earlier on, people was like, you know, should you wait earlier? It could dip further. Yes, it could dip further. Joel Greenblatt often says that if you buy the bottom of a dip, you are lucky, right? Odds are when you buy a stock, normally it's going to go against you a little bit, you know, for some period of time. It's not going to be something that I buy exactly at the bottom. And if you try timing the bottom perfectly, you're probably going to end up missing out on the move. That being said, what I am doing is, because of the reason behind the Chinese stocks dipping with the government situation, the regulations, etc., we don't know how long or how it will play out. I'm not going to take a full position straight away because it's quite a unique scenario that's surrounding it. So basically what I'm going to do, I'm going to take a 0.5% position initially here. If we get a bigger dip, let's say it drops another 10, 20% or whatever, or some more news comes out and it makes it drop quite sharply again, I'll add in again. I did it with Douyu recently. So this is a stock that I own. I first bought it about $6. Then when it had another drop, I bought it once again. It's now only trading at about $3.96. I'm obviously down on the stock overall, but this stock has a really strong balance sheet, really strong company. I believe this could easily be worth back up to, you know, somewhere around the $10 a share mark or whatever. So, you know, this is a stock that I'm happy to hold. How long is it going to stay here? God knows. And how much further can Alibaba go? God knows. But ultimately, it's about, you know, working yourself into a position. If you're risk managing that position as well, i.e., you know, your position sizing is sensible, it doesn't matter if it goes 10, 20, 30% against you for a little bit of time. Warren Buffett often says that if you cannot stomach owning a stock for it to then drop 50%, you've got no business being in the market. If you can't handle that, if you bought a stock today and in 2 weeks' time it's down 50%, if you can't stomach that and you're the type that would panic sell that, you don't have any place being in the market. The reason being is that short-term price fluctuations are random. That's why typically when you intraday trade and stuff like that, you'll trade more technically based, because of the situation that you have to be reading the price action more than the fundamentals, right? The cash flow of a business is going to have no say over what it does over the next week. However, if you're investing in a company longer term, you need to have some more of an understanding of what the fundamental picture is behind it. You know, you might be somebody that trades predominantly based on trends and stuff like that, such as Henry, but he still knows and he understands what's going on with the company. If the company was hemorrhaging money, was, you know, looking at potentially going out of business, had tons of debt, all the rest of it, Henry's not going to buy it just because it's trending. If it's a company like a Morgan Stanley, for example, whose earnings are trending up, everything looks great, the company's in just a solid, strong position, it's a trending stock, and you then get a nice entry, you know, pull back to a level, whatever, then you can go acting on it, right? So you've always got to have that balance. Now, when we're looking at Alibaba, this is a really strong company as far as I'm concerned. I want to run you through the sort of fundamentals behind it now, right? So we know that technically it's dropping, etc. We know obviously the Chinese situation behind it, but what's going on with the business itself? Let's have a little bit of a walkthrough. Now, currently, we're trailing PE ratio of around 26. Now, for this type of company in this particular sector, that's actually quite low. Ideally, we like it underneath 20. It's probably not really updated from its biggest drop recently. But ultimately, this is a pretty low for as far as the sort of sector goes. Return on equity and return on assets, we want them over 5%. This is 17% and 9.8%. So they're very good and healthy there as well. Earnings have been consistent, generally growing overall, flattened out a little bit up here at about 150 billion in earnings over the last 12 months. But overall, the trajectory of the earnings has been increasing. Now, if I take you over to Stockopedia, we can do a full breakdown. What we can see here is the revenue growth is averaging at 48% per year in revenue growth. That's huge. It's averaging growth of 48% per year. And analysts think that it's going to continue going. We don't weigh too much on what the analysts say because there's normally a reason they're an analyst and not an actual trader or investor. But the revenue has been growing around 48% per year. Okay, these figures, by the way, are in Chinese yuan. So the numbers might look a bit bigger. So obviously we've got very strong growth there within the revenue. If we go into the actual income statement itself, we can see here, look, revenue growing year on year on year on year on year. There isn't actually a year in the last 10 years where it hasn't grown from the year before, i.e. look, 20 to 34 to 52 to 76 to 101 to 158 to 250 to 376, 509 to 717. The net income of the business, that has also been increasing over time. 4.2 to 8.5, 23.3, 24.2, 71.4, 43.6, 63.9, 87.6, 149 to 150. Continuously growing once again. If I go over to the balance sheet, this is something that's really, really good about the company and gives me a lot of faith in the business as well. Total current assets, which is essentially cash equivalents, inventories, things that can easily be turned to cash, 643 billion. That's obviously, again, Chinese yuan, right? The current liabilities are just 377. The total liabilities are just 744. So they're not far of having enough cash to be able to pay all total liabilities. To put that in perspective, that is a bit like you having enough cash in your debit or current account right now to be able to write a check to pay off your mortgage in full, to pay your gas and electric for the next 30 years, your water for the next 30 years, to be able to pay off any credit card debt, your car, student loans, any sort of obligation you could have over the next 30 years, you can pay it with the right of a pen today and write a check. That's kind of the kind of position that they're in. Not many companies are in that position. Very, very rare situation. So that shows how strong their balance sheet is. They've not got a huge amount of debt relative to the sort of cash they've got. They can almost afford every single outcome they could possibly have over the next 30 years or so already right now, this minute. That's an extremely strong position to be in. Now, on top of that, what you've got here is obviously you've got the shares outstanding. They have increased slightly recently, but not massively. We can see we've jumped up ever so slightly over the last couple of years, but there's not a huge increase. But again, that's because they've got a strong balance sheet. Quite often, if you've got a company that has a weak balance sheet, maybe the debts are creeping up, they've not got much cash on hand. What they'll do is if their shares are overpriced a little bit, they'll go and issue some shares to raise some capital. Obviously, you'd have to look into the annual report to find out the reasoning why they've issued more shares. But the fact that it's not a huge amount doesn't put me off. If they'd had a 30, 40, 50% increase in shares outstanding, like some companies do, then it would, obviously ring some alarm bells. But that's not the situation. There's only about a 9% increase over the last 5 years within Alibaba's actual shares outstanding. So basically nothing, right? If we look at the cash flow, then once again, we can see obviously that is increasing, growing year on year on year. Obviously, the expenditures is increasing, but the actual growth of the operating activities is increasing quicker. We can see, obviously, the cash flow figures there. The actual average free cash flow for this business on a year-by-year basis over the last 5 years, the 5-year average is $19.42 billion. So obviously, these figures, again, are in Chinese yuan, but $19.42 billion, right? So this is a company that's in an incredibly strong position. With that being said, the stock is actually being affected by the short-term news. This isn't going to be news that's going to be around forever, right? So the regulations will come in place, things will go on. We know that the Chinese government can maybe be looked at sometimes as well as trying to teach companies a lesson and all that kind of jazz. But ultimately, this is a strong company, and I would be very confident in its ability to recover over the next few years. As I say, I don't know how long the situation is going to drag on with this with the Chinese government, the regulations, etc. But given that I know it's not going to be a permanent thing, and the business is in a very strong position outside of that, I'm happy to start buying up some shares, take advantage of the dip. If it dips a bit further, depending on what the situation is, how much it's dipped, etc., I can then add to my position, bring my average price down, give me a bigger discount to my intrinsic value. But ultimately, I'm going to be targeting back up to that 250 a share price. Of course, I will keep up to date with the story of the stock. If some things start to change with the company, for example, let's say I know it took on a load more debt, and over the next year or so, it started to really hemorrhage some money or whatever, and then we're looking at a different intrinsic value for that business, and obviously my target might be adjusted. But as far as I'm concerned, Alibaba is now an undervalued stock. I'm going to take advantage of this dip, and we'll see how it plays out. We'll keep up to date with it. But again, it's just one stock in my portfolio. It's going to be one stock of like 41 stocks I'm going to hold. So, position sizing, you be sensible, but it can be a unique opportunity. So we'll take advantage of them. I do own a couple of Chinese stocks. Like I say, I've got Douyu in there as well. Got like a 50% target on that to the upside. What other ones have I got? I think Jobs is also a Chinese company, if I remember correctly. So yeah, there's a couple of Chinese companies and stuff in here. What's the other one that I've got? ATHM. This is the same sort of situation. Had a big sell-off recently, but strong. You can see the earnings, etc., still increasing. Ultimately, guys, things like scenarios like this, when a stock has a big drop, most people go and panic sell. You should be rubbing your hands. Obviously, you've still got to be buying good quality companies. That doesn't mean you just go, right, what's dropped the most, I'm going to go and buy it, find out why it's dropped. But if it's, things that aren't affecting the overall underlying business in terms of the quality of the business, and the business has a strong balance sheet, it's got good fundamentals, etc., behind it, it presents just an opportunity to you. Sorry. Does that make sense, guys? I hope that makes sense. Has everybody kind of kept up with that? Kind of you understood what I'm kind of getting at there? Just give me a little yes or no in the chat box so I know you kind of understood everything and stuff. Good. Yeah, QD, so Quidian. This is a stock that I currently own. I've got a price target on it here at 375. This is a stock that I own. Was you right to buy more Douyu when it dropped? Yeah, presuming that you've kept within your risk parameters. Yes. Or ATHM. Again, as long as it's kept within your risk parameters. If you've gone, let's say you on average, you invest 2% of your portfolio into a company at a time. If you've invested 2% into that stock already, you can't then keep going and adding more and more and more and stuff like that. Keep within your risk parameters, but whatever they are for you, yeah, as long as you're keeping within them, that's fine. Yeah, Quidian. This is a stock that I own. Got a very low PE ratio, price to earnings there, just 1.97. If we go back here, if I remember rightly, this is a enterprise multiple stock. That's why I own it. Yeah, it's got a really low enterprise multiple. So yeah, this is a stock that I own. I've got a target on this, as I say, of $3.75. So we'll see how that gets on. Currently trades at 187. But again, this is a company that's got a strong balance sheet, etc. If I remember correctly. Where are we here? So yeah, look, total current assets 11.6 billion. Total current liabilities just 473, and it's only got 1.4 billion in actual total liabilities. So it outweighs it's got about 10 times more cash than it has the actual long-term debts, etc. So again, if you want to kind of use another example, if your house was worth £1 million, that's the equivalent of you having 10 million in your bank. You've got 10 times more than what your actual mortgage, etc., is all worth. So they've got tons of cash on hand. We've then got, if we go back over here, their actual revenue has been growing at 73% per year. If we look a little bit further, what's the situation with the shares actually? So the shares outstanding has been decreasing. Everything about it ticks all the right boxes, yet it's only trading at 187. So we can basically double our money here up to 375, and I would say that that should be quite achievable over the next sort of year or two, you would imagine. So we've got this solid base. Bearing in mind, this company's traded as high when it IPO'd. It opened about $34. It's been, yeah, it might be, it's been impacted a little bit by that as well. But obviously, it's been down here since basically the start of 2020. So, it hasn't really kind of moved much more recently based on the news of the regulations and stuff. But yeah, I own this stock, like I say, got a 375 target on it, back to these little previous highs. I think it's massively undervalued. Company looks really solid, tons of cash on hand, hardly any debts, decrease in the shares outstanding, revenues growing. I mean, it's an absolute no-brainer as far as I'm concerned to own this stock, Quadian. Like, why would you not? I can't literally find a reason as to why you wouldn't own this stock at 187. Like, it's an absolute no-brainer. I actually bought it a little bit higher. I'll tell you in a second. Bear with me. So I bought it I actually bought it up at 255. So I'm actually thinking about buying some more QD down here. I think I'm going to add to this. Might add to it on the open again today. So yeah, I'm going to be buying. I'll probably buy a little bit more QD. Bring my average share price, bring my average holding price down. Sorry if I can get my words out. But a company like this, there's no way it's going bankrupt, or it's virtually impossible to go bankrupt. It's got 10 times more cash than any bills and debts and liabilities it owns. Like, how can it go bankrupt? So look, the thing is, your percentage swings. What you have to remember when you own a stock that has a lower per share price, keep in mind that you need to have stronger emotional situation. And what I mean by that is that the share price only has to move a tiny bit and it looks like bigger percentages. So like, I'm actually down from my original buy in Doyu about 30%. No, not QD, sorry, about 26%. Now, obviously that sounds like a lot, but all it's done is it's gone from 255 to 187. So it's only lost 70 cents a share. It's like nothing. It just obviously sounds a lot because of the percentages. But like I say, when you're sitting here and you've got a company like this that's in such a good position, yeah, I'm gonna own that stock every day. Not a problem at all. So I'm probably going to add to QD, going to buy Alibaba on the open, and yeah, just continue managing the portfolio sensibly. The thing is, what you've got to remember, guys, that the markets are very kind of uncertain at the moment. Very, very uncertain in the sense of a lot of people know we're massively overvalued. We're at all-time highs, etc. A lot of people know that we're hugely overvalued, yet there's still that euphoria in there, right? Now, it's one of those situations, like somebody's just asked me there, look, Ben, with the US overpriced and Chinese going down, do you think it makes sense to rotate part of the portfolio to China if we're thinking very long-term? The thing is, what you've got to remember is there's that old saying, the market can stay irrational longer than you can stay solvent, right? And the market can do things that it shouldn't do for long periods of time. A market can be overpriced and become more overpriced, and then get a bit more overpriced, and then go get more overpriced, and that's when you end up with bubbles, right? They obviously pop, and eventually you have a bigger correction. But the point is that it can stay crazy for a lot longer. What you have to be careful of, because a lot of people go completely to cash. This is a post that I made yesterday on my eToro, and I said, let me bring it up for you. So here, look, I put this post up yesterday on eToro. I said, look, in recent weeks, there's been more choppiness and uncertainty in the markets. There's more talk of a market correction from many analysts, and I myself have spoken of how the market is overvalued. The biggest mistake you can make as an investor is to worry/panic sell out of your high-quality positions. Market corrections are perfectly natural, and it's impossible to know exactly when they will happen. By panicking, you lose out on the quality investments you already have, plus the potential opportunity cost by sitting on the sidelines waiting. And what I mean by that is we have no idea how much higher the market can go. So if you just go, well, I'm just going to kind of come out for that reason, then what's going to end up happening is it can be a situation by where the market can keep going, and now you actually have opportunity costs that you've missed out on. By all means, diversify. Like, if you're sitting there going, you know what, I don't see any good opportunities in the US at the moment, but because of what's going on in China, it's brought some companies into focus for me. Diversify. By all means, do that. But I wouldn't say necessarily coming out of the US just to put over there, because you have no idea what's going to go on with China. and no idea, you don't know anything for certain. If you knew for certain that this market was going to drop and the Chinese market was going to recover, fantastic. But the problem is we don't know anything for certain. So we have to always kind of hedge ourselves and play both sides to a certain extent. Could problems in China bring down the US market? I would say it's probably unlikely because of what it is. It's not like there's a problem within the economy. This is China introducing or wanting to bring in regulations quite harshly. So there's no underlying issues with China. If it was an economic downturn and they were really struggling, you could say it could ripple out into other economies. But, a bit like when you had the housing markets and stuff like that go in 2008 and, kind of has that ripple effect. Because that's not the situation. It's one of those things where, that you can't say for sure how it's going to affect. At the end of the day, guys, what you have to remember is when you're trading, you're always dealing with probabilities. You're never trading in certainties. We have no idea what's going to happen tomorrow, next month, next year. All we can do is focus on making sure we invest our money into quality areas in a risk managed way, and then look to take advantage of the long term that will then give us an edge where we can perform. There's no certainties, though. We don't know what the Chinese market is going to do. We don't know what the US market is going to do. We don't know when this will recover. We don't know when this one will correct. We don't know if this particular, stock is going to do really well over the next 12. There's no way of knowing anything for sure. So always remember that, right? Always sit there and go, right, I'm dealing in probabilities here. So let me weigh up the probabilities, and then I can make a probability-based decision in a risk-adjusted way. That's what you have to do. Does that make sense, guys? Do you get what I mean by that? I haven't done a video on JD Company. No, I do actually have it on my